Hey guys, Akil Stokes here and welcome back to the channel. The other day we did a video on technical analysis versus fundamental analysis. Today we're going to talk about technical analysis for trend traders versus technical analysis for counter trend traders. And spoiler alert, there's no difference. And that is the point of this video, to show you that there is no specific analysis for trend traders. There is no specific analysis for counter trend traders. The fact of the matter is, if you are skilled at technical analysis, meaning your ability to break down the market and find the hidden patterns that the market has for you, you could be dangerous in both scenarios. And not only that, but you can learn to take advantage of the market, both when it goes up and when it goes down, and when it goes up to down or down to up. It'll all make sense once we start the video. Now, before we hop in, something I want you to do real quick is subscribe to the channel. I know a lot of you guys watch these videos on a regular basis, but you're not subscribed. Takes a second. Click the button. It does two things. One, it makes YouTube know that my channel is awesome and I like that. It makes me happy. But two, and more importantly, it makes YouTube know that you enjoy these videos. That way, whenever I produce new content, it puts it into your feed and you don't have to go searching around for hidden stuff that you missed. So just do it. It's a win-win. All right, let's hop in with some live analysis from my live trading room this morning. And then I may come back at the very end and show you how you can still take advantage of this trade if you are looking to trade it. But you shouldn't. This isn't a signal. It's an educational video. All right, let's hop in. Let's start with Euro Yen. Did any of you guys have a chance to get involved in this trade? We spoke about this yesterday. We looked at it on the hourly and the 4 hour. Anyone? We had the ascending triangle type of deal here, which gave us a beautiful opportunity for you guys that were up at midnight, right? We go down to our hourly chart. Look what we did here after breaking out to the upside. We retraced back down. Who can tell me what type of move this is called? Yep, complex pullback, AB equals CD pattern, right? We then put in a very nice, who can tell me what this type of candle is called? You can use any of the terminology you want. Not a doji, nope. Pin bar, yep. Pin bar, hammer. A doji would need a wick on both sides of it. So these are dojis, these two right here. Already got wicks on the upside, wicks on the downside, showing that, oops, wrong, slanted arrow, showing that the market pushed one way, then pushed the other way. This one is just the rejection to the downside. And then after that candle, what do we have here for you guys that like a very specific entry reason? Higher high, higher close, right? H3C. It's a beautiful ascending triangle, confirmed breakout to the upside, pull back in the structure, rejection candle, higher high, higher close. Doesn't get any easier than that. From a technical perspective, psychologically, everything's always going to be hard, but beautiful setup right there. Something I definitely would have jumped in if it weren't past my bedtime. So it is what it is. That is trading. I made the decision a long time ago that I am not going to stay up 24 hours to wait for trades because it wrecks everything that we try to work for in trading. But it does happen. But anyway, the question now is what's next? So what have you noticed in the market? We've gone on a pretty good bullish rally, right? Would you guys all agree? I would hope even the newest of traders would say yes. And is the market, we know where the market's at, right? We know that we've been doing analysis on this Euro Yen for a while now. We know that we're at that bigger bat pattern that formed. We need to go into weekly back in, was it 1991? Boom. No, too far back. No, not far back. Any weekly, there we go. That would help Akil. We know that we're at this level right here, right? So there is room to certainly go higher, but we are at this previous level. And price is starting to do what? As we take a closer look at this, right? We ran with the bulls. And what is happening to price action? What is happening to our candlesticks? What is happening to things that I don't want to spoil by using the word? Yeah, we've got a little bit of deceleration, a loss of momentum, right? Price action is putting in big, strong candlesticks. And then they get smaller and smaller. The range gets smaller. The slope, right? Look at these two candles. The slope is this. Look at these next two candles. The slope is that, right? We are putting in deceleration. Is there any clue on the chart that would give confluence with deceleration? Perhaps an indicator? Yeah, the RSI still is, massively overbought, right? We went all the way up to, what do we go to? 90. 90. And just to remind you guys, the closer it gets to 100, the harder it is to move to 100. It is like if you have a very long stick, it is pretty easy to break, but the shorter that stick gets, the more effort and force it takes to break said stick. So keep that in mind. So this is an opportunity for what type of trader perhaps to take advantage of the market? Yep, a counter trend trader. But trend continuation traders, don't worry. There is also an opportunity for you, and the analysis is going to be exactly the same. I will show you why. So you're a counter trend trader, right? You're looking at deceleration. You got deceleration in the market, loss of momentum. We have our doji candle up here. Doji is a sign of indecision. Let's say you are waiting for a lower low, lower close. Now, the one thing you don't have, you don't necessarily have major structure. We're not quite at major structure, right? We're in a consolidative like zone, but we aren't at that major structure level. Again, if we remind you of the weekly, and again, the time machine that takes us back to 1991 when we were doing everything but trading, right? We know that our main level of structure is going to be up here, right? This, I'll draw two lines kind of in this area, right there. I'll make them yellow. That way when we snap back, or orange, when we snap back to reality, you can see that we are indeed a little bit far away from those levels. But as we bloop back to reality, and then we go back to our hourly chart, yeah, you're going to see that the key level of structure, right, is quite a bit higher. So keep that in mind. So that it doesn't necessarily mean it's a non-tradable opportunity, but I'll share with you what it means for moi, in a little bit. But let's walk through the process, right? So we're looking for a potential counter trend trading opportunity. Price action did big boom, right? We do know that we have intervention looming in the background potentially, which is, it's hit or miss because it's a scare tactic, but psychologically could have effect on the market. Let's say you're looking for a counter trend trading opportunity. The next question I have is this. If you're looking for a counter trend trading opportunity, then where are you looking for said counter trend trading opportunity to go to? So perhaps where is the location that you guys would be interested in taking targets at? I know my location. I think this one's a pretty easy one in comparison to some of the ones we get. I just did a video on, I didn't put it up yet, but I did a video on the volume profile tool, and it was explaining that one of the reasons that I like using it is because in tricky situations, it could be the difference maker between level A and level B if all else is equal. This one, I don't think we're going to have that problem, but we can bring the tool out anyway and take a look at it a little bit later. Bringo says 180 30s right here, and what's your reasoning for that level? So don't just type in your level this time. Type in your level and your reasoning. What do you like about that level? I know what your answer is, but I want to hear you say it. We got two people saying 180s. Same thing. Type in your reasoning if you may. 180 flat or 180.01. Breaker says structure. Right, looking at these little levels right here. Bang. Fib retracement at 180. Fib retracement from this deep swing down here. This deep swing. There's a few places we can bring fibs in. I would say the two places you can look at is right here and then right here we'll draw them from both. But we'll bring in Fibonacci retracement from swing low to swing high, right there. And again, here's the cool thing about an hourly chart, right? Markets are moving, you're getting all scared, right? You can't do anything. If your most aggressive entry is going to be a lower low, lower close, we have to wait until this current candle completes. So it's 8:12 right now. You've got 48 minutes. So that's a gift and a curse. You have 48 minutes to do analysis and make your decision in the market. That's one of the benefits of being a swing trader versus a day trader, where day trader you may have 5 minutes and now you're rushing through everything. The downside is that you have 48 minutes to also deal with FOMO of like, oh my gosh, that red candle is getting bigger. It's sucking into my profits. I need to enter now before the move has been made. So gift and a curse there. But we can bring a Fibonacci retracement from this swing low to swing high here. You can see we have a 50% right here, 618, and then 786, 886, a little bit lower. Again, those don't mean too much to me. Personally, it's the main three at top. We can bring in a Fibonacci retracement from the bigger swing. And you can see that we have a 50% retracement right below that 180 level as well. So I think that's the one he's talking about, but I'm not sure. All right, so any other ideas here? I'm going to erase some of these fibs just to kind of give us a clearer chart again. But the idea is you're projecting your target level. The one thing I would say with the 180 is this. You notice at this 180, and we'll bring volume in as well. You notice at this 180, it's right below the low of this wick. So like if you are someone that's shooting for 180, you might as well get like, what is this going to be? You might as well get, I think someone wrote this in too, you might as well get like 180.01, 180.02, just so you're not below the low there, because you don't want to get missed by like 1 pip or so. And again, lastly, we can bring in some volume. I hope I have the right tool up because I was messing around with it yesterday. But let's bring in some anchored volume profile, and look at this, interesting, right? We talk about the void. We talk about the majority of volume here. The void ends kind of right at that first level that Branko spotted out. We also have our highest peak, right? Point of change right here at about 179.88. So maybe that plays a role into your decision making. Maybe it doesn't, right? That's for you. I personally like this level up here, the first one, right above this level of structure, about 180.30s. So now you got that. I think no matter what you choose, I don't think there's going to be a risk-reward problem. So now the next question is, or the last question, is you have your targets, you know your stops already because you have rules for those, right? What is your entry reason? And this shouldn't be something that you take a lot of time to think about because it should be in your trading plan, right? You don't have to kind of make something up like, I'm going to do a fancy dog fluff pattern today. No, it should be in your trading plan. So here's I've got 3 ways to enter a trade, right? My first way is a lower low, lower close, right? That is my most aggressive way to enter a trade. The thing, however, is I like this level. I like what's going on with the RSI. I like how price action is reacting at this level. However, there's one important thing that I do not have that I require for my trading. And what do you think that one important thing is? Yeah, I don't have structure. I don't have structure. So I'm going to need to take a more conservative approach. So instead of waiting for a lower low, lower close, I'll need to wait for a double top. And that's just my shift of, again, me being, I can be more aggressive in better trading opportunities. I need to be less aggressive in worse trading opportunities. So decent trading opportunity here. Let me get this into our pro trade log real quick, and then we'll talk about the trend continuation trade. Because again, these yellow lines up here, orange lines, excuse me, that's still where we think price can go. So let's talk about that as well. But let me get this in because I can't do 2 things at once. This is Euro yen. Let's get it in here. Now, here's the cool thing about analysis, right? And I mentioned this time and time again. There's no such thing as trend continuation analysis. There's no such thing as counter trend analysis. There is just analysis. If you are, so this level right here, or the higher one, or the lower one, whichever one you choose. I'm looking for my money face guy. Oh yeah, money face, right? Right? Whichever one you choose, these are the levels that we're looking at. As counter trend traders looking to get short, we are looking to get short to these levels and extract profit from the market. If you are a trend continuation trader, how do you think you're setting up this trade for yourself? What analysis do we need to do? Anything else? Or, spoiler alert, have we already done it? It has already been done. Duned. Ooh, Dune, good movie. Right? We already did it. The same level that we projected price to go to as a counter trend trader is the same level that we would project price to go to as a trend continuation trader. It's the same exact analysis. The only difference is the counter trend trader is saying, how can I get involved up here and then get out the market here? The trend continuation trader is saying, hey, if price action comes to here, how can I get involved to the opposite direction and go up there? And of course, the trader that does both, if you're feeling fancy, you can ride it down and then you can look to ride it back up. So again, it's just learn how to do analysis. You can be dangerous in any market, but you can be dangerous as any type of trader as well. There's no counter trend trading analysis. There's no trend continuation analysis because ultimately there actually is no trend, but I won't go down that rabbit hole again. But if you can do good analysis, you can make good predictions, you can be dangerous in many different types of ways in the market. So that's another trading opportunity here for the trend continuation trader, waiting for that pullback. That pullback we would expect to come to this level, obviously waiting for your reason for entering your signal within that level, and then looking to trade it up to that ultimate level that we've been stalking since the ascending triangle broke out. That was the original trade, if you guys remember. All right. Any questions about this? We can go down to lower time frames too if any day traders are in the building here. Day traders, you've already got a lower low, lower close off this rising channel. So if you're a day trader, you might be in the trade already. I'd probably change the targets a little bit as a day trader. Look for this level right here. This little pregnant pause, about 180 half. Let's go down to a 5-minute or a range bar. Yeah, so you have, if you're on the 15, you've got the lower low, lower close entry right now from that rising channel. On the 5-minute, you can actually look for a retest of the highs right here. See if you get a retest, another lower low, lower close might be a secondary chance to get involved to the downside. So cool opportunities there. Any questions about the euro yen? So coming back a few hours later, the market has really dived down. It's about, 2:30-ish New York time. So the London session is closed. The New York session really isn't doing much as is at the very end. And we all know we have the big news announcement tomorrow as well. So I don't expect the market to do anything prior to that. But if you were someone that was still looking to get involved in this trade, maybe you're day trading the Asia session, for example, I want to walk you through what happened and how you can still take advantage of it. So we're going to head into replay mode because I think it's really cool to do that versus just kind of just look back at candles. It gives it a little bit of that live experience. And we're going to go back to right here, right? So price action came off of that deceleration period pretty well. It didn't come down to where we would expect it to come to, but we did move off of that. And then, I have the camera right in front of my chart here, we did this. Now, this green candle right here is what's called a higher high, higher close candle. Now, it may not look like it, but if we bring over our data screen right here, if we look at the highs of this red candle, that's going to be 180.97. The green candle is going to be the same, 180.97. And we look at the highest close, right? Because we must break and close above to violate this level. We see that the highest close was 180.98. Now, I know what you're saying, Akil. That's only by 1 pip. Does it matter? Yes, it does matter. The rule doesn't say close to higher high, close to higher close. No, it says higher high, higher close. So if it's 1 pip, it does matter. And what this does is this initially invalidates the bearish bias. Now, we know we had a bullish and a bearish bias on this. this invalidates the bearish bias because we broke and closed above structure. We created a new structure high technically. But as price carried on, right, something else happened. We carried on, carry on, carry on. We then, right here, I'm always one candle too late, re-broke our low. So kind of resetting that once again. We had a higher high, higher close that took away our selling opportunities or our selling interest. We now had a lower low, lower close, which took away short-term our buying interest. And now we can be sellers again, right? It's confusing, I know, but if you understand kind of how to read a price chart, it makes perfect sense. Perfect time to do a really, really quick plug. End of November, trading workshop, actually next week, trading workshop. We increased the seatage already. We're up to 450 last I checked. We are going to be shutting it down very, very soon. So if you haven't registered, get off the fence and do it now. Link is in the description box below. Blah, 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 blah. Be there, be square. Don't make 2026 the same way your 2025 was. No regrets, right? All that fun stuff, right? So now that we've broken and closed below here, we can actually look for continuation down if you want. And what we would need is we would want to see a pullback similar to a 2618 type of trade, and then use that to catch that extension down again to this level right here. And if we follow along with price action, you're going to, here, see, we did just that. There we go. All right, trying to, there we go. Look at that. We rallied up, right? Probably right into that 618, right? Again, it's not technically a 2618 trade, but come on now, right? It's pretty much, it would have been a 2618 if it wasn't for that one stinking pip, right? So very similar to a 2618 trade. We put in a doji candle indecision. We put in a doji pin bar candle, another indecision with a high test to the upside. And then we put in a very strong lower low, lower close. So if you were someone that was looking to enter a little bit late, right? Or just because you couldn't enter there, this is a decent opportunity to look for a trade. Again, we can look for that same area right here if you're conservative and have stops right above that level, whatever that ATR would have been. So again, I don't think anything's going to happen for the rest of the day because the main two sessions are done and we have news tomorrow, which might wipe the market out of whatever it's doing. But just to add on to the two lessons I already shared with you, these are alternative ways to get involved in a trade if you understand how to read a price chart and if you are skilled with technical analysis. If you like this video, do me a favor, hit that like button before you leave. Same thing, it plugs it into your YouTube algorithm. That way YouTube shoots you more awesome videos by yours truly. And if you have any questions or comments, leave them below. I got a few videos coming up that are addressing the questions that you guys have been asking. I love creating content. I love talking trading if you can't tell. So if there's something you have a question about, leave it below. I'll answer it either personally, which I answer every question anyway, or in a video episode. All right. Got to itch my nose and I've been fighting it off as much as possible. Until next time, play your trade, trade your plan, take care. Oh yeah, that feels good.